everyone, it's Josh from the Blockchain DXB podcast, and today we have an interesting guest, Jason Hitchcock, who's the CEO of Greenlane Holdings. Now, according to me, he's kind of like the OG in the DeFi space. So really excited to talk about his journey, what he's building with Greenlane Holdings, and how it is connected to Berachain, and quite a lot of interesting things regarding the market as well. So before we go and start, Jason, thank you so much for doing this. And I wanted to check, how has your day been so far?
Day's been good. Never a dull day when you're running a public company. There's all sorts of things to do. We just did our filings. We have a board meeting coming up, and we got a lot of content that we're creating. So, running around.
Yeah, I do see you've been actively involved in a lot of podcasts as well. And talking about the crypto market, Jason, last week on the 12th, the CPI data was out. And at the end of the month, there's also Jackson Hole's speech. Now, these are really important dates. How do you think that's going to be impacting the broader cryptocurrency market?
What's interesting is, the last couple years, maybe 22 to 2024, there's been sort of like Bitcoin is, there's a rates trade, and people would really look closely at these meetings, these FOMC meetings. They would look at CPI reports, and Bitcoin would have a lot of volatility around these reporting, these figures. Like you'd see a 10% move or a 5% move. The last few meetings, it's actually been pretty muted, regardless of what the inflation data is. And maybe what that's saying is there's a different marginal buyer. We have ETFs, we have DATs. There's been a regime change, and maybe that's not necessarily the same catalyst it was before. And so I'm curious to see what the next sort of high volatility type moments are. Is it, Morgan Stanley opening up, their entire sales force and making a recommendation of 1 to 4% of your portfolio, as like Matt Hogan from Bitwise talks about. Once that starts to go to market and you start to get these long-term holders that are just adding to their portfolios regularly, that could be a different type of catalyst. Or maybe it's IPOs, unclear. So I think the thing that I thought was most interesting was how uninteresting it was when it happened.
Absolutely correct. Back in the day when people were talking about Bitcoin, often they used to associate it with scam or internet money, isn't it? But right now, even the president of the United States of America is talking about Bitcoin. So, things have definitely evolved quite a lot, particularly in the Bitcoin space. Now, Jason, before we get into Greenland Holding, Berachain and DeFi, I have a very specific question regarding Bitcoin. How do you define Bitcoin? What is your definition of Bitcoin?
I think Bitcoin is, I think like if we were to talk like from like a tech perspective, Bitcoin strikes me as what I would call a minimum viable product. People have heard these terms around startups, and the product is a public database. If a private database is like, hey, you make a website or an app and you're storing your data on AWS or Google Cloud, that's a private database. Nobody has access to it. It's owned by a company. Maybe you can provide APIs to people to get access to the data, but people have to trust your app that like the data's there and it all is good. A public database is a database that's like a blockchain. It's out there in the public. Everyone has access. Everyone can read. Everyone can write to it. What Bitcoin is a public database. You download software onto a computer to run it, a miner. We have countless numbers of these computers around the world, so you can't turn them off. There can be bad weather, there can be war, there can be governments that say these aren't allowed, but it's not enough to turn them all off. And as long as one is running, the database is up and it works. And that's what Bitcoin is. And it has a very simple application. You can do addition and subtraction. You can send Bitcoin from one wallet to another, and Bitcoin is the only thing on it. And it worked. I think we saw over time, people found a public database interesting. The first application of moving value around was really interesting. And the minimum viable product developed a network effect as more wallets joined, as more computers signed up to be miners, and it had staying power and it became digital gold. And then I think layering onto that, if Bitcoin as a minimum viable product for a public database is like the application is a calculator that can do addition and subtraction, that's it. Um, where Ethereum kind of builds on that, it says, hey, this public database is really compelling. What if we could have more expressive applications built on top of that database? What kind of data would we write to that database other than moving value around? And that's where I think that's like when DeFi summer happened. We saw all these
Yes.
financial primitives, lending, borrowing, DEXs, stable coins, tokenization of assets, NFTs. You saw a lot of experimentation happening around what could a front end be for this database. And that's where we've seen like a lot of explosion in activity.
I'm so glad you mentioned about digital gold. And Kevin Walsh, who's the new chair of the Federal Reserve Board, he often calls Bitcoin as digital gold. And he talked about Ethereum. Back in the day, Ethereum was advertised as being the first world computer. And so far, it is definitely living up to the expectation. And look, I think you're kind of like the OG in the DeFi space. You are definitely an early adopter, and your profile in X, it does have an NFT as well, I believe, isn't it?
Mm-hmm. Yeah, it's a crypto punk.
A CryptoPunk here. Now, do you want to tell our listeners how did you get involved into the so-called crypto and blockchain space?
Yeah, like I spent my career in Silicon Valley. I spent the first, 14 years of working at early stage startups. And so when you're in that environment, you're just around a lot of like engineers, you're around an engineering culture. People are always experimenting with new things like VR, AI tools. And I remember when a CTO of one of my companies was just, geeking out on Ethereum, and I had owned a little bit of Bitcoin because like you buy Bitcoin, but like I didn't have enough to get rich. And so when he started talking about Ethereum, and I really looked up to Furkan, he was the co-founder of AppLove and very really smart guy. I just decided I will pay attention to Ethereum. And so I bought a little bit. And then once you own a cryptocurrency, you sort of like pay more attention to it because like the price moves. It went into a bear market. I forgot about it. And then, you know, zero interest rates, stocks started to move. My Ethereum started to wake up. And I was like, why is Ethereum waking up? My portfolio is a little bit bigger. I started listening to Bankless, great podcast. I was looking for other content, and I had friends who were playing with DeFi apps. They were using Curve and Yearn and Uniswap and MakerDAO. They were collateralizing their ETH and borrowing DAI against it. And
Yeah.
so we started doing this together. They were showing me how to do this stuff. What can you do with your ETH? I always thought you just held it. And they impressed on me that you can earn yield. And I was curious, like, where does the yield come from? What do you mean yield? And I was looking all around DeFi and seeing lots of applications that were like reinventing how a financial product works. A decentralized version of a bank is different than another, MakerDAO is different than your local bank branch giving you a loan. You give it collateral. You don't need a credit score. And I found that fascinating. I got obsessed. I started moving more and more of my money into ETH and like rolling it around DeFi to earn yield. I started evangelizing it on Twitter. I raised a small fund, a liquid token fund to invest money around DeFi. I did this kind of through the 2021 through 2022 and a half, like, sort of bull run. I kind of timed it really well. And yeah, I was just a part of it. And like during that time, of course, NFTs came out. I thought that was
Yeah.
interesting. I thought NFTs as a primitive were a fascinating technology. It's kind of like a barcode. I thought
Yeah.
the collectibles made sense for like why that was a use case that took off, although I did find them kind of silly and like they kind of remind me of meme coins now. But I did think it was interesting that like the Ethereum community found historic NFTs fascinating. Crypto punks were a historic NFT. They sort of created the collectible collection, if you will. And I thought they were
True.
pretty cool. So I got one. There were other historic NFTs, like, people would find the first sound file or NFTs that like degraded over time as you traded them more. Like, I just thought it was interesting how people would try to unearth these mechanics and those became valuable. I think since like they're less valuable, but I still think like I have a fond memory of that time.
I'm so glad you talked about DAI because they were the one project that actually kicked off the whole DeFi movement, isn't it, MakerDAO? So I'm so glad you actually
Maker
talked about that.
MakerDAO, I
Yeah,
think really Compound really kicked it off.
yeah,
It was really, which is similar to MakerDAO in that like it's a lending platform, and Compound sort of invented liquidity mining
yeah.
where you could earn comp tokens by providing liquidity on the platform, which kind of bootstrapped, their supply. And Compound was or Maker was really interesting in that they had DAI, a stable coin where you could collateralize ETH or Bitcoin or other stable coin, yield bearing stable coins, borrow against those assets. You could take those stable coins, provide liquidity on Curve or Uniswap, earn fees there. And so that it kind of bootstrapped the liquidity of DeFi itself, which during DeFi summer, I think these were all interesting experiments, and people were talking on Twitter about how they were all fascinating. Today, we are several years later, and many of these experiments like Aave, Uniswap, Maker, which is now Sky, they've really grown tremendously.
Yeah.
There are institutions that put capital on these. We're seeing tokenized stocks trading on these platforms. We're seeing, large institutions getting behind stable coins, and, companies like Stripe launching their own blockchains. I think we've seen an evolution where something started as a cool idea, and now there's a widespread recognition that these ideas really do disrupt the way financial services have been offered, and we're starting to see a mass adoption moment.
Definitely. Thank you so much for that, Jason. Now, look, in October of 2025, Greenland, they initiated Berachain-focused digital asset treasury strategy, which is dedicated to acquiring BERA and increasing BERA per share, isn't it?
Mhm.
So do you want to tell our listeners what was the reasoning behind it? And then fast forward to 2026, what is the latest update with what is going on?
Absolutely. So digital asset treasuries, or DATs, are really interesting. Michael Saylor sort of pioneered them with MicroStrategy for accumulating Bitcoin. And at that time, what was interesting was public markets didn't really have a super clear proxy for exposure to crypto. And so we
Mhm.
started to see treasury companies form, and we saw a bunch of Bitcoin ones form. Since then, we've seen ETFs launch and more ETPs. And so we have a variety of ways for people to get exposure to Bitcoin and ETH. For longer tail assets and emerging assets, there aren't necessarily ETFs. So Berachain, for example, the way to get exposure to it is through Greenlane. The Berachain Foundation and some of their investors like Kraken and Blockchain.com and Polychain, they organized a pipe of about $100 million, of which half of which was locked BERA tokens, so around 50 million BERA tokens. They did a reverse merger and merged into Greenlane last October, and it became the sort of preeminent venue for public markets participants, family offices, retail investors, anyone that doesn't want to have a crypto wallet. They can get a Nasdaq listed, regulated uh, path to get exposure to Berachain. And Greenlane, we don't just passively hold BERA. We do market operations on Berachain. We stake the tokens. We earn yield through proof of liquidity, which we'll talk about. We put our stable coins on different DeFi products to earn more yield, like lending and DEXs. And our goal is to increase our BERA per share. And we stand to be a buyer of BERA and increase our token supply. We're the largest holder of BERA. And so our mission is to be a public market megaphone where we're telling the story of all the interesting things happening on Berachain, and also being a big accumulator of BERA as well.
And roughly around a month ago, you also posted a letter
Hmm.
called as Letter from the CEO BERA Strategy, isn't it? Does it
Yeah,
contain all of the details that you talked about, or is there anything else in that letter that listeners should be aware about?
yeah, absolutely. What I wanted to, make clear in that letter is I wanted to frame how people should look at Berachain and Greenlane as well, because, Greenlane historically was a cannabis accessories company. It was taken over in a reverse merger to go through a transformation to become a BERA focused digital asset treasury. So I wanted to help educate the market on this transition and reducing costs of on the sort of historic side, and also tee up what's the future of Berachain look like? They went through a major update on their blockchain recently where they simplified their token design, which increased the yield and how that benefits Greenlane shareholders. Berachain is interesting in that typically other L1s are trying to become like the operating system of like the global computer. Ethereum came out, it showed us, like I talked about, what a programmable public database could be. And we're seeing applications proliferate. I feel like Ethereum is becoming sort of like an institutional preferred one world global computer. It's like the settlement layer of all of this. And we've seen a number of blockchains come out that were incrementally faster, or maybe they're private, or there's some small difference to that they market as like, this is what makes us different and why we're going to unseat Ethereum. Berachain has a different lane that it's running in where instead of using its security budget just for securing that public database, it also routes emissions to the startups building on Berachain to accelerate their growth, to help them with customer acquisition costs. And those startups in turn share revenue with BERA token holders. And so Berachain is aiming to be more of a growth platform, where it does joint ventures with entrepreneurs who want to build Web3 startups. And the deal that they do with Berachain is they receive token emissions to accelerate their growth. And in exchange, they give capital, some of their revenue back that they generate back to token holders. And there's like a symbiotic relationship and alignment. And so what I was saying in that letter is Berachain is like an index of the companies building on Berachain. It's a portfolio of businesses. It's a house of brands. Think of it like Y Combinator or Constellation Software. And it's running in its own lane of they partner with businesses. And we're really excited about some of the businesses building there. And we think that there's a lot of proof points for this model. We think this is an interesting model for a public database.
So builders in the space, they benefit as well, isn't it?
Absolutely. Because if you're an entrepreneur, you're going around, what do you need? You need capital. You need to recruit a team. You need all the help you can get. And when I was at Third Web, we had infrastructure and dev tools that worked on hundreds of blockchains. And I led their business team, and every startup I talked to was asking us, do we have grants? Can I introduce them to investors? Can you connect us with the blockchain team so like they could somehow finance us or help us out? Every single team was asking for this. What's interesting at Berachain, they don't have like a pool of grants that they need to replenish and you apply and things like that. They have at the chain level, at the protocol, the way the chain is designed, every single day it's streaming tokens that go to businesses that they can then use to support their liquidity attraction. They can use to subsidize rates on lending markets or on their dexes so that users will provide capital and grow the TVL. And so that chain level support is unique, and it helps businesses attract capital, make it more sticky, and ultimately grow their businesses to earn more fees.
What I'll do is, in the show notes, I'll definitely go and put out that letter because, listeners will definitely love to go through that
Sure.
letter.
Yeah.
Now, there was a recent filing as well. I believe it was last weekend,
Mm-hmm.
Friday, if I'm not mistaken. And based on the filing with SEC, it states that the Greenlane Holdings grew approximately by 81.3 million units, if I'm not mistaken, isn't it? But here's the thing, right now we are so-called in a bearish market. So what message do you have, regarding the current cryptocurrency market right now and the current DAD strategy?
Well, we're always a buyer. Much of that, I think those earnings are a benefit, signal like a benefit of our strategy, where in bear markets, we still earn yield. That much of that was earned through just staking our tokens and doing market operations. We were earning revenue from the chain, which grew our token per share. Like the number of shares we had out there didn't change, but our token position grew. And so I think people talk about crypto cycles, the DAT strategy. DATs are some people view them as like levered positions on crypto where you accumulate crypto and then bull markets happen, tokens appreciate, and, stock prices
Yeah.
move accordingly as the market values your net asset value, and they look at, your outstanding shares and your market cap. And so during bear markets, we see these as great entry points. And during bull markets, that's, when things get interesting. And that's when, you have the potential to trade at a premium, and you
Yeah.
can hit the ATM and, sell more shares to bring in more capital. During bear markets, that's when we earn yield. We also deploy our cash prudently to acquire tokens at a good price. So, in terms of where we are in a crypto cycle, I mean, everyone has their own theories on 4-year Bitcoin markets. There's macro liquidity. You asked in the beginning about, FOMC and Kevin Warsh, and
Yeah.
it's hard to predict, but it feels like we've been in a bear market for a while. We're
Right.
in an accumulation phase. There's all these technical analysis people on YouTube, that have their own theory on where we're at. I think what I focus on is I look at all the adoption, like we talked about on Wall Street. We're seeing apps now like look more like real apps. They're not like funky Web3 experiments. We're seeing more users than ever on blockchains. Transactions are through the roof. And I think like that story, like those facts are gathering, like any one of these facts, like Nasdaq announcing they're going to do tokenized something, or
Yeah.
DTCC is announcing they're going to
True.
tokenize. Like that's amazing. Like the largest clearinghouse. Any one of these in 2021 would have made crypto go nuclear. Today, these are just like headlines, and then we move on. I think what's going to happen is we're going to have an overwhelming amount of these facts that will amount to a narrative where people will look at the asset class and be like, "Oh, what have I been missing?" I think retail will have that moment, and I think capital will come back.
Very true. And there's always this saying, when the prices are going down or when you're in a bearish market, treat it as a gift, an ideal time to go out and buy and accumulate a lot of these things, isn't it? And regarding price predictions, regarding YouTubers, I often see all price predictions are 100% right, 50% of the time. Nothing is certain, isn't it? So,
No.
really insightful information. Now, you talked about, you're building things across more than 150 chains at Third Web.
Hmm.
And you've also said in recent podcasts that token emissions were just growth hacking, and it ends up diluting everyone. Now, based on your experience, Jason, how do you spot networks that are creating real sustainable economic value versus those that are just kicking things down the road?
That's a good question. When I look at, because I made a point that I think emissions are they're not bad. Like they are a unique mechanism of crypto, like the decentralized computer that we talked about earlier, Bitcoin and Ethereum. One of the properties that comes with them are tokens, and also like the minting and the emissions of tokens. That is like a concept Bitcoin invented with miners. Uh, we see that blockchains can use tokens as an incentive, an economic incentive to bootstrap networks and modify behavior by creating this economic incentive. You can get people to rally and take actions. And so I think it's fascinating to see how different products and applications and networks use incentives. And over time, we've seen this evolve. Like we've seen airdrop hunting kind of come out. We've seen liquidity mining programs, and we've seen lots of copycats that just do these programs just to kind of do run pulls, or like they're just doing it just to like eventually sell their token, and like there's really no product plan there. And that's what I was speaking to. I think the way you identify if something is real is, are there applications that have product market fit? you know there are many blockchains, but how many blockchains have an app that people love and rely on? People love using Hyperliquid. They love that application. And Hyperliquid is using the fact that they have this perp stacks to expand into a broader, more generalized EVM to have other applications. So it's like I would look at does a blockchain have an app people love? Like Solana has pump fun. And like,
Yeah.
there's a lot of meme coin trading, and Ethereum has DeFi. Uh, Berachain uses emissions to bootstrap new products, and they have an ecosystem of products that they've partnered with. And so I think the question is there something differentiated here that users love? And does it have product market fit? And if a chain has that, then they have sort of like a magnet that pulls users in, and that's what matters. I think if a chain launches and they just have copy paste applications, maybe they have users that are pulled by incentives, but they're just copy paste applications, and eventually those incentives go away. Then that might not be something that has staying power. And when I was at Third Web, we would sell infrastructure to lots of these chains, and we would see some of these chains that were mostly incentive based, and their contracts wouldn't renew on like an indexer because like it was just like kind of a moment in time. But there were other chains that had product market fit. They had applications that had durable growth, and you could see it in the usage of the infrastructure.
And some of them are not there to last, some of the copycat ones, isn't it? And regarding Pump.Fun, I'm not sure if you watched Black Mirror. They do have an episode where they have something similar to Pump.Fun in Black Mirror. Have you watched any of
Oh,
the
I
Black
need
Mirror
to see that
episodes at all?
episode. I haven't seen it. I
It
know the
is
show.
really, yeah.
Black Mirror is a show that is exhausting. I can only watch one episode at a time because at the end of the episode, I'm like emotionally spent.
Yeah. And regarding, real deal models, Jason, what would you say makes a real yield model actually look like when it is something built to last for a long time? How would you go and build it?
I think the yield needs to come from some sort of customer that is getting value in that experience. So there can be a blend of some of the yield is the protocol emitting tokens, and maybe that is used to bootstrap activity around the protocol. And then another portion of that yield should come from a real human being that says, I'm clicking this button because I value what happens after. And that's why I come back. And some of that, I'm going to pay a fee. And a portion of that fee is going to go and get absorbed into that yield profile that's given to a future user.
Mm.
And ideally, that it, like the mix of that yield expands over time and becomes more and more based on the person paying for it. On Berachain, for example, protocols actually bid to receive some of those emissions to them. They'll pay 60 cents for every dollar of tokens they receive. They then receive that Bera token that they can use to incentivize and pull in more users who then do transactions, generate fees, which go into the company treasury, which they can use to bid on future emissions. Berachain has another program where you can partner with Berachain, and Berachain, you're basically saying, we will take emissions today and kind of like debt financing. In 12 months, we're going to pay back every dollar we receive with $1.20. And, that $1.20 needs to be earned from users. And so like they're sort of doing joint ventures from select startups that have growing businesses. And so there's other protocols all over that give users yield, where a portion of that yield is a blend from real transactions. I look at Curve Finance or Aerodrome, or even Hyperliquid, which I mentioned earlier, where, when you're staking your hype tokens, like you're earning yield, which is a portion of the fees. I think Pump.Fun, which we mentioned earlier, you can stake your Pump tokens and earn a portion of the revenue from Pump. And so I think we're entering an era where people, we had like a meme era where everything was a meme. Tokens didn't necessarily give you revenue, but like they might represent a concept, whether it's like a silly idea in the meme coin area, or maybe they represented a serious business, like, Aave or Uniswap, like these big growing companies, and the credibility of the company itself and like the big metrics were a meme. But I think we're entering an era where how much revenue is shared with token holders, that's also becoming a new idea for investing in tokens. And so there's a whole group of tokens that they have designed themselves to not only have a strong business with product market fit, But the way you get exposure to that company is by owning the token, which receives some of the revenue on a regular basis.
You talked about owning the tokens. Definitely sounds great for someone who's in the DeFi space. But how do you explain the value of holding BERA token to traditional Nasdaq investors who are more inclined towards understanding what Bitcoin is only, isn't it?
We are seeing that investors in the cryptos, people that want exposure to crypto, they're more advanced today than they were 5 years ago. 5 years ago, a lot of people were waking up to like, okay, I'm right. Like, it's not just like engineers that are talking about it and
Yeah.
cypherpunks. It's like a lot of people are talking about crypto. Like, I want to understand what is crypto, and that led them to conviction in Bitcoin. You can fast forward to today, where the market of people that are allocating to crypto, they are prepared. They're beyond prepared to understand Ethereum. They're looking at a broader set of concepts that they're ready to understand. They see that tokenization, decentralized exchanges, lending, and stablecoins, they understand that these are major mega trend products. In the same way that, like, if you want to understand AI, you might understand what ChatGPT is. Uh, AI might feel abstract, but you see ChatGPT, you know how useful that is. Crypto may feel abstract, but you see how stablecoins work, you get it. Or tokenizing funds, like BlackRock is doing with their build fund. And so they're then asking the follow-up questions like, how does this work? What are smart contracts? What are validators? Why do validators earn yield? That level of discourse is where investors are at today. And so they're able to understand that there can be a product that has a lot of users that are doing transactions because they like the product, and those transactions cost fees, and that the token for that product gets some of those fees. They are prepared to understand that.
That's a solid way of putting it across. Now let's talk about the state of the market, particularly in the United States of America,
hmm
because there is midterm elections coming up,
hmm
and I believe on 15th of September, we might be getting some assessment regarding Clarity Act. Now you
hmm
posted via X that the chances of it getting passed is 50%.
It
Do you
was.
still it is 50% or has it gone down to 10% or 20% now?
It's hard to know. I've been following it closely. I think the Block, Laura Shin's sort of media empire does a really great job covering it, bringing on experts. They noted something interesting, that like there was a period of time not too long ago where Capitol Hill banned staffers from using prediction markets, and so that might be why like it's hard to follow. Maybe a lot of the prediction markets are just based on public sentiment. I'm hoping that's true, because right now it's at like 20%.
Yeah.
Um, you know, who knows? What I see is an administration that is very bullish crypto. They signal that they're going to be doing productive rulemaking from the SEC and the CFTC, even if it doesn't pass. We see in recent years, crypto is now a political force. I do think it's politicized a little bit, because this all happened under like a Republican regime, and the president has a negative association with crypto. Like, I've heard one take that it could be good that Clarity doesn't pass under this regime, and when it does pass in the future, it becomes apolitical, because there's a lot of Democrats that support crypto now too, and if it wasn't under the Trump regime, it wouldn't feel like crypto equals GOP. I don't know what people think about that. What I do know is everything I'm hearing from the left and the right is there's a lot of, I think the ascendant point of view on the industry is that this is a real industry, and it's important to bring it onshore, and there's a risk to not taking action. And we're going to see action from a policy perspective taken in various forms. We had the Genius Act pass. There
Yeah.
will be rulemaking. And so I think this is all it's going in one direction, and it's going to be hard to put the toothpaste back into the tube. So that's how I feel generally about like the political environment.
And at the macro level, do you think anything else that is beyond United States of America, be it, let's say, conflict that is going on in the Middle East or any other developments, be it new form of cryptography or quantum computing, that could potentially trigger the price of Bitcoin or cryptocurrencies, either in a positive or negative way?
I think the best thing for crypto would be to continue growing so that it becomes like every time a new company emerges that has traction and revenue and has, and grows its user base, whether it's with businesses, institutions, or retail users, as the variety of crypto enabled products and use cases grow and the usage of this technology proliferates, it becomes less of a speculative asset and more based on real revenue. Every new company becomes a billboard in society for how people perceive the industry. As Chase Bank, starts to make it easier to send money to Coinbase, as the CEO of Western Union talks about coming out with crypto, stablecoin cards and converting their money into stablecoins. As Stanley Druckenmiller says, all money will convert to stablecoins in 15 years. As more of these things happen, the surface area of crypto becomes bigger. I almost think it's similar to like a Sharpe ratio where like back in time, crypto was an idea. So the token was just exposure to that idea. As time goes on, it's more real. And so tokens become more exposure to that real thing. And there's more ways to conceptualize the technology. And as things become more real, they become more resilient. And it's less related to how was in the inflation data.
Yeah.
What a bird flaps its wings in New Zealand. How will that affect the token? So yeah, it becomes less tied to our mood and more tied to the real business value being generated.
I'm so glad you talked about, the mood, because often it is the market sentiment versus what the data is, isn't it? And earlier on, we talked about prediction. Based on my prediction, 18 months after the Bitcoin halving is when the price of Bitcoin reaches a new all-time high. But we talked about all price predictions are 100% right 50% of the time. Now,
Yeah.
are there any other things you have noticed in your journey in the cryptocurrency space regarding the market sentiment? It has
I've no
definitely evolved a lot since the last few years, isn't it?
I've noticed that crypto is, because we talked earlier about how a unique property of crypto is tokens. And, I think a lot of people, most people can't invest in startups, unless you get an account on Angel List, you're an accredited investor, founders and you're writing checks. The universe of people, venture capitalists and angels that invest in startups is quite small. And startups have a very high failure rate, 99% fail. And those failures are felt by that small group. They feel badly when their startups fail. With crypto, tokens are out there. Anyone can buy tokens. It's very easy. And crypto, is just like the startup world where there's a high failure rate. And so the failure rate is felt more broadly than the startup the startup asset class. The token asset class is way more broadly held. And so that's why we have these emotional cycles that feel like society, is up or down because so many people have exposure to tokens. And so I think that's a unique thing. And that creates a collective sense of waiting. We're all waiting for the next CPI print. We're all waiting for the charts to turn. We're all following technical analysis that will show us how to wait and what our expectations could be. And that's like a unique thing. We have, tokens are traded. And so we have these data points that are streaming at us that feed this sense of waiting, of highs and lows. And so I think that's a unique thing about crypto is the collective sense of waiting and the broad sense of it's an extremely online industry and we're all talking about it. And so there's a Wall Street bets type feeling across the whole asset class where there's a big public discourse. We're all emotionally tied to it. And we have a lot of data that informs how to wait. And so that creates a strong emotion internally that drives the euphoria and the dread.
You're talking about euphoria, Jason. Right now, there's a lot of momentum building in the AI space. And a lot of the Bitcoin miners and crypto native companies, they are pivoting to AI. So are there any plans for Greenlane to pivot into AI data center? Right now, the buzzword is sovereign AI data center as well, isn't it?
It makes sense. I think a lot of, I think for Bitcoin DATs, like there's a lot of ways to get exposure to Bitcoin. And there's also, it could be said that digital asset treasuries are a bit of a power law where the alpha, like the number one and number two treasury might be like the winners of that category. So if you know, I'm just putting on my pundit hat. If you just have like a small amount of Bitcoin and no other business, what's the argument to invest in your treasury over the other Bitcoin treasury that has a little bit more Bitcoin versus the one like the micro strategy?
Mhm.
So they're looking to diversify their businesses. And if they've invested in mining, they have all the infrastructure to kind of move into, they've been digging for gold in one place, but there's another place to dig, and that's in the AI space where there's a tremendous amount of unmet, demand to serve. And so that makes sense to me. We're not looking at AI data centers or anything along those lines. We're very focused on our BERA accumulation strategy and earning yield from our assets. But I can totally see why Bitcoin mining companies are looking in that direction to diversify.
Now, Jason, I was listening to one of your episodes. I think it was with Blockhash podcast, where you guys were talking about agentic commerce. Really interesting one. I'll definitely put that in the show notes as well. And what I really liked, in that episode, you talked about the biggest thing that you've seen from the life cycle is prediction market, and we touched base about regulations in the prediction market space. What is your assessment? Do you think it should be the state who should be doing the regulations, or do you think it should be the CFTC?
Oh, that's a good question. I don't have strong opinions about which regulator. I do think it's good when markets are regulated. I think when you prove like that's part of the government's role is to regulate a market so that everybody trusts the market. They enforce laws. They protect businesses that are participating. They protect consumers participating, and there's consistent rules of the road. And so when new markets are invented, I think it only is natural for them to become regulated. And when they become regulated, trust in those markets grows. And so I think the question you're asking is like, who's the best person? I think if you have uh, a national market, you have many states, having a national regulator to me makes sense rather than having 50 different cops on the beat with different rules of the road. That makes it difficult. So in the same way that we have so I think federal could make sense. But it's a new market. And so there can be a lot of innovation at the state level in terms of how we think about things. I do think New York is they've been particularly tough on crypto.
Yeah.
And so, I would want to know more about like their perspective on what direction they're coming from on this. I haven't looked too closely at, the regulation of prediction markets yet.
Yeah, what has happened in New York is the Attorney General, they have sued Galshi, but CFTC has put out an order that they can continue having their operations. But last weekend, it was Washington State. The court has put a ban on Galshi once again. So it's going to be really interesting to see what the outcome is. The reason why I wanted to ask that is because what happens in the United States of America, the other countries literally follow a similar pursuit as well, isn't it? So it's going to be
Although it
really
seems
interesting.
like when it comes to crypto, we're following, we're seeing other countries do more innovative, more on point DeFi and crypto
Yeah.
regulations. And I think like that's the opportunity with the Clarity Act is for us to actually take the lead again.
Now, as a CEO, Jason, is there any mantra for success, particularly during the crypto winter, that you would recommend to other CEOs and builders in the space?
Well, I think, stay focused on your mission and what do, because again, like there's highs and lows, but there's constant adoption growing. And, you know, you have to stay focused on what you're building, and the progress you make is what should give you energy because you can't control the masses and prices. Focus on what you can control and have sort of your own attitude be driven by the activity and action that you take. So, I always try everything I learned from my career is about taking action. You only learn when you take action. Things only change when you take action. The only thing, if you don't take action, you end up in a fear, uncertainty, doubt loop. What's going to happen next? I don't know. Nothing's happening. I now have more doubt. oh, I have more doubt. I feel bad and I'm not doing anything. I'm now more afraid. And so like that can be a toxic loop. And so I think just constantly take action.
And that goes back to the old saying, the greatest risk is not to take a risk at all, isn't it?
Absolutely. You have one life to live.
Yeah,
So
true.
don't sit around.
Now, beyond the world of artificial intelligence, and the next question, Jason, this is purely written by AI. So you're not answering it to me, rather you're answering it to the AI. Well, so let me read it out word for word. Now, the question is, if I as an AI were granted an autonomous wallet and tasked with managing a portion of Greenlane's treasury, what guardrails or risk matrix would you set me up for before letting me deploy capital into Berachain's proof of liquidity? That's quite a handful, isn't it?
Yeah, I think checking, was it an audited contract? Are there can it do a check on, a certain number of wallets that have like a lengthy history on them of on-chain activity to that make it seems like they're human. Um, do a review of social sentiment and like, are people what are people saying about this? Are there reputable websites that have reviewed the product? You essentially like want to quantify like what is Lindy, what is its uptime? How long has the protocol been up? How much TVL does it have? You want to quantify like and define how many signals can you give the AI to tell you this is something to try, and then ultimately uh, then you have like levels of risk sleeves. Like, okay, here's like what a test would look like. It's a small amount of capital, and here is a certain amount of time. Maybe it's like a few months, and here's what like a positive or neutral outcome would be. A bad outcome, I would revert. And if I hit my positive outcome, we can expand my sleeve to add it to my portfolio mix. That's kind of what my answer would look like.
Excellent. Now, the next question is not crypto related. Now, what advice you'd like to give to fellow CEOs and builders to maintain a work-life balance?
Oh, that's a good question. I think it's important to have a schedule. If you don't have a schedule, then you end up doing a lot of ruminating in your thoughts because you don't time box things as much. Or if you don't have a schedule, you don't look forward to things as much. So, like my schedule, like I have a schedule where I get up in the morning and I work out with my wife. I play pickleball at the end of the day. I cook myself lunch, or I go to the grocery stores and I buy stuff to cook dinner. And I have like these beats in the day where I'm disconnected and I'm enjoying something. Um, that has really helped me. And I would just recommend it to anybody else. As simple as that sounds, I think adhering to a schedule allows you to time box your emotions and give you something to look forward to.
In fact, let me end it with another final question, Jason. And this is again, I was listening to your episode and the host asked you, what is happiness? And you give a really good answer. And earlier on today with my niece, we were just discussing, what is happiness. But let me take it a bit further. What role do you think AI can actually play, either in helping happiness or deterring happiness?
I think, what did I say happiness was? Remind me.
What you said is, the words that we choose if we talk about positive things.
Hmm.
We feel happy if we talk about negative things. And that was something really
Yeah.
powerful and so interesting, isn't it?
Yeah, I got that from I went to a Tony Robbins show in 2014,
Oh,
and
excellent.
a lot of people make fun of him. He's like motivational speaker. I was super skeptical, and I went, and he said this. He gave me a lot of tools that were really interesting. And I recommend anybody go to his intro show or watch his Netflix special. But the words you use in your head to define that describe things that happen are become how you feel. I got dumped, or I am now single. Like these are different ways to describe the same things. Um, so how AI could help you? I mean, the way I use AI for happiness is there's things I'm passionate about, and I use AI to help me go deeper in my passions and help me discover things. Like I treat AI like it's a god expert at everything. So if I'm interested in cooking, I love cooking. I like getting better at cooking, and I also love you know, we all have favorite foods. I have a prompt that I have given my AI that's a default thing I can activate by saying dish name equals, and I just type in
Oh,
the name of a dish, and it will teach me a Michelin level masterclass on how to cook that dish. And I can talk to it and say, no, make it spicier. Or while I'm cooking, I might make it bad, and I'll describe what's wrong, and it will help me fix it. And I have become a much better cook. I'm cooking more enjoyable things. I'm eating healthier because of this. I have another prompt on, I've described all the shows, all the anime, all the movies, all the books that have blown my mind and just left my jaw on the floor. Like, just, I couldn't believe it. And I've said this to AI, and I said, what else should I be consuming? Books, comics, anything. And it was like, I totally understand exactly what you love. You love sci-fi stories about the human consciousness with time travel that change the way you think about the universe or the human condition. Here's 20 stories that you would enjoy. And
Excellent.
I go through them, and I'm like, wow, it's like the ultimate fan. And so I think using AI to help hold your hand to go deeper into your passions has been really pleasurable for me. I've even used AI to help me, have a better relationship with my wife, whether
True.
it's planning dates, um, talking to AI about our current relationship and where it could go. And it comes up with, milestones that I could build into our relationship in the near and medium term that I could work towards. And,
Yeah.
hey, let's plan a staycation. I didn't think of that. And so I think just whatever you're interested in, using AI to help you go deeper on that interest.
That is definitely solid advice. Thank you so much for Jason for doing this. Really appreciate this. Any final words you'd like to tell our listeners regarding Berachain or your journey in the crypto space?
I think now is a great time to keep going deeper into crypto. It's never been more real, and there's never been more happening. And you can follow me on Twitter at Jason Hitchcock. You can check out our website, greenlane.com, or GNLN Holdings on Twitter. And I would just encourage people to go check out Berachain. Greenlane is the best way to get exposure to Berachain in public markets.
What I'll do is, all of your details, the website, and even the letter, I'll definitely go ahead and put it in the show notes below. Thank you so much, Jason, for doing this. Really appreciate this.
Thanks. It was a lot of fun.